Hey guys, welcome to a new video of Bitcoin Edge. Today we're interviewing 52k Skew on Twitter. Hi Skew, how are you?
I'm doing pretty good tonight, man. How are you?
I'm good. Where did your name come from? Skew.
So, 52k Skew came from a very large options trade at the end of 2020 where someone bought a bunch of calls for 30k and 50k and 52k, like, back to back basically.
Mm-hmm.
And of course, they nailed it and they made a lot of money, but not a lot of people saw this trade. And I thought it was kind of like one of the first, maybe institutional bets in the space, which I thought was pretty cool.
Yeah, that's
So I
pretty
made my
sick.
name that.
Yeah, yeah.
And I also had a huge obsession with options trading back then.
Yeah. I remember. You had a few other names as well before you made this account. Not sure. We're going into that, but I know you've been around for longer. Um, Oh, I see. This account is from 2012. Anyway, on Discord, we know each other like quite a long time already.
Yeah,
Um,
like since COVID, basically.
yeah, wasn't it earlier? I'm not sure. Yeah, probably
No, no, no,
COVID.
no.
Yeah,
It was COVID. We're both from a Discord called Crackden, kind of a meme name.
yeah.
But in that Discord, basically, it was some big names like Insilico and other bigger traders that mostly trade order flow. So order flow trading was quite new. I mean,
Mm-hmm.
not really new because order flow trading's been around for maybe like 10 years in ES traders,
Mm-hmm.
right? So for some behind or pre-context.
Mm-hmm.
And that is where I started a lot of my trading strategies came from that period during COVID.
Yeah. That was an epic period in that the Discord server. I cannot lie. Met a lot of great people over there, including you, of course. Um, and I kind of miss that,
And
that
yeah,
that server like being active. Had some other good
yeah, true. I
ones.
mean, like a lot of them had day jobs, myself included. I had a wagey job at the time,
Hmm.
while also studying accounting and finance, which then I later deferred and went full time crypto trading and digital businesses, which I am still currently doing.
Perfect. Very nice. Very nice. So yeah, you don't want to go in deeper in what you did before crypto, or do
Yeah,
you?
sure, sure.
Okay.
So before crypto, all right, this goes back to 2019 when I first got into crypto, and obviously bought the majors back then, which was Bitcoin, Ethereum, which I think was like $200.
Mm-hmm.
Kind of crazy because it's 10 times that now.
Yeah.
Wild. Um, and Litecoin, I think I bought even like Doge as like a joke.
Mm-hmm.
Only if I actually held that Doge bag, that would have been nuts.
Yeah. Yeah.
Given it went what? I don't remember the all-time high of Doge, but a lot of people were calling for $1 when it was like 50 cents or something, which I think might have been high. Crazy.
Yeah. I mean, a 2x, at some point isn't that much anymore for an altcoin, but it surely was close to the top, I think, back then.
That's a
Um,
good point to make because the market that crypto used to be is very, very different to what it is now,
mm-hmm.
in terms of the amount of money that has gone into the space is insane.
Yeah.
I mean, we didn't really have a actively traded and utilized DeFi. Like DeFi started around mid 2019,
Mm-hmm.
but only became big after something called YAM, and a lot of people might remember YAM. But essentially, you could farm and stake YAM back in the day during COVID, and people started farming insane amount of money from that. I think a lot of people probably made six figures, if not millions, off that. And then Yearn Finance came out with their farming and staking,
Mm-hmm.
and they had the YFI, which started trading on I think Uniswap or SushiSwap, one of them, and it was a few $100 before it was on centralized exchanges. It's like Binance or Coinbase,
Yeah.
and it peaked at around 100,000.
Insane.
Yes,
Insane.
2017. I wasn't there at the time, but I know that market was huge in terms of ICOs pulling, 10x's, 50x's, 100x's, right?
Yeah, it
Last
was. It
cycle,
was.
the 2021 cycle, 2020 to 2021
Hmm.
was more like DeFi and other tokens, which had something called tokenomics, right? Which
Hmm.
allowed people to create a yield using the token as staking, right? So they made a lot of money off the underlying tokens. Probably quite a few hundred X's from that cycle.
Yeah. Yeah, for sure. For sure. Like,
But to actually answer the question of what I did before crypto is cybersecurity specifically. So I studied information technology, majoring in cybersecurity and information systems. And I spent quite a few years working in that space as well. So I adapted quite a analytical way of thinking, even though I've always had a very analytical way of approaching pretty much anything. So that could be learning markets, emotions, business as well,
hmm,
which has allowed me to learn very quickly how to manage a lot of problems that traders face now and every day, which is emotions, right?
yeah.
And PTSD. And PTSD part only really comes with people that trade without a logical plan, like a trade plan, right?
Yeah,
And
for the listeners, like one of the interview questions I have is PTSD, from trading, um, you know, or something similar. I'm sure a lot of people, lay awake at night thinking about their trades and stuff, and about the money they lost or won, So that is why it's
all
a
the money they
question.
missed, I think
For
that's
example, could have, should
the
have.
most,
Yeah,
yeah, no, yeah.
yeah. So yeah, sorry, go on. Sorry for interrupting.
Oh, good. So PTSD, we'll start with that, right?
Mm-hmm.
So a lot of people, when they first start trading, is that, they're learning how to trade, how to approach markets, how to approach like chart patterns, candlesticks, trading oscillators, indicators, right?
Mm-hmm.
And essentially, in my opinion, you really shouldn't margin trade until you have a very adaptable trading plan and
Mm-hmm.
also strategy. So, like, your strategy really allows you to have a trading plan, right? So that's your first step.
Mm-hmm.
And I would even go further to study markets before you have a trading plan and strategy, because you need to understand some of the macro dynamics, like the DXY chart, for example,
Mm-hmm.
which is a mix of different currencies, like the Japanese yen, the euro, which I think is most of it, and it
Mm-hmm.
essentially makes up a quoted version of the USD, right? So that allows traders to gauge if cash as in USD is strong or weak in each and every day, right?
Mm-hmm.
And if USD is weak, that means risk assets like the Nasdaq, ES, Tesla, for example, or even like Nvidia can actually be a risk on stage. So that means you can long Ethereum and Bitcoin when the US dollar is weak, right?
Yes.
And that would be more towards the macro environment, right? And this would be, are we in a period of economic easing, where Federal Reserve and the ECB are actually stimulating economies and providing liquidity to the market, which actually creates a economic base for bull markets, right?
Mm-hmm.
Or
Yeah.
bubbles.
Yeah.
And 2020, 2021 was a really good example of a quick bubble.
Oh yeah. Yeah.
Yeah.
Yeah. They even had the helicopter money and everything.
Yes, yeah, true. I mean, COVID stimulus was one where people were degenerately using that to bet on, cryptocurrency and stocks and zero-day
Handbags.
expiration
Yeah.
options.
Yeah, but also like, handbags, for example, the Louis Vuittons and stuff like that. went local as well. Like people, I'm still
Yeah,
amazed
no,
by it.
that's absolutely true. Yeah, goods and services were blown out of whack, which is why we're still facing, such high demand,
Yeah,
for products.
yeah,
Consumers are so in debt, which is not good, right? And
yeah,
we have pretty sticky inflation because of all of this.
yeah, uh, yeah. Over here it comes down quite well, but um, it's insane what happened. It's insane the bubble we've had, what they did.
Yeah, it is. I mean, honestly, I think we're going to go into a probable even bigger bubble, like where everything kind of blows up.
Yeah,
But I think after that, there's going to be a period of stagnation.
yeah,
And that would be, 10 years. We've seen this before. The periods of about 10 to 15 years of just choppy price action for stocks.
mm-hmm.
While economies try to kick off stimulus and growth again, we could actually get that again. But yeah, anyway, before we get off topic, my point is context is important in basically everything, like how you approach trading,
Mm-hmm.
how you approach your psychology before you trade, and macroeconomics, right?
Mm-hmm.
So, in all, you need to be quite concise and logical with everything. And when time comes of a bull market, that's when you can actually take the left curve. But otherwise, always be quite protective of your wealth and cash and take well-advised trades, where like the risk is low, the return is far higher than the cost of margin.
Mm-hmm.
Things like that are quite important.
Yeah, yeah, totally agree, and good point. Um,
Yeah, and with this being organized and logical, right, you don't have to face stress that much. It's far less than having little idea of what's going on in the markets. Why Bitcoin is crashing, why Bitcoin is mooning, for example.
mm-hmm.
It all relates to, things like net liquidity, the TGA, basically what the Fed is doing with liquidity in the markets.
Mm-hmm. Mm-hmm.
Right?
Yeah, totally agree. Um, and like when it comes to trading, itself, you make amazing agar templates, for example. Do you scalp with them as well?
Yeah, I do.
Um,
I'm a low time frame trader,
mhm,
but a lot of the trades I take in different markets are usually high time frame. So like the Nasdaq is usually high time frame based off the bond market
mhm,
yields. All right.
yeah,
What Federal Reserves are doing,
mhm,
the strength of the US dollar opposed to like something like the AUD, which is very sensitive to commodities, which is very sensitive to um, like the period of deflation or inflation, basically, right? So currently, for example, now currently Asia is quite deflationary and commodities have been quite weak, which is why gold is chopping around quite a bit. So is Bitcoin.
mhm,
And before, let's say 2009 to 2011. All right, if you didn't actually know, commodities were very, very strong. So the Australian dollar was actually above the US dollar. And this is after the GFC, right, which considerably weakened the US dollar because the sound resilience of the financial system in the US was not so sound, right? It was
yeah,
quite ass, to
yeah,
say the
yeah,
least.
yeah. I remember the euro was way stronger as well compared to the dollar. Yeah.
Yeah. The Europeans were also stimulating their economy quite a bit. They were, yeah, I would say deflationary. And you had after that, right? So
Mhm,
let's say 2011 to make it easier. You also had the debt crisis, right? The debt
mhm,
ceiling crisis,
mhm,
which took very long, longer than people thought, and they extended their debt ceiling um, obligations a few times before they actually came to a consensus on agreement, right?
mhm,
This also really allowed different currencies and different markets to boom for a bit. So it removed the US dominance for a temporary period,
Yeah.
which is something to note. And obviously, Bitcoin was created around the time, so it's a bit hard to see just how. I mean, you can't compare, current Bitcoin to previous Bitcoin.
Yeah. Yeah. Totally agree. Yeah. Because like like this is still like how to say it, uncharted
Oh,
territory for
uncharted
Bitcoin.
waters.
Yeah,
Hmm.
basically. Bitcoin hasn't been tested like this yet. So
Yeah, true. I think this. Well, I mean, this would be technically the second test of resilience for crypto, specifically Bitcoin, right? And I think over this year, I mean, this year it's already showed a lot of resilience and strength and a lot of optimism because people are finally looking at Bitcoin as a more digital gold that it has scarce properties for wealth preservation in terms of sats, right?
yeah,
This
and
doesn't really necessarily apply to the cost value, which is just the price that is denominated in things like, the US dollar. Because in a hiking cycle, right, the US dollar is going to remain strong
yeah,
because of hiking, right?
yeah,
But yeah, long term, Bitcoin is definitely more valuable than cash,
yeah, yeah,
at least current cash.
yes, yes. What was I gonna say? Yeah,
I do that sometimes. I'll have a point and
no,
then
and you,
forget
and, you, and, you,
it.
and, you, and you mean like Bitcoin is really showing its strength compared to like what happened, like the banks, for example, the last few months, or
Yes, bank equity, which went to zero for a few banks, like SVB,
yeah,
and the others correlated to that, which was all more or less triggered by not enough deposits to back up the level of the bank run.
yeah, yeah,
Right, and a lot of these banks also use their bank equity for like deals. Right, so that is a different kind of debt that is not realized by a lot of these banks,
yeah,
which is more or less it's a good catalyst for Bitcoin, right? And it was. A lot of people bought it as like a hedge, as well as bond yields, especially the 2 year created because of the emergency program initiated by the Fed and the Europeans for their big bank that also went down, which was acquired by UBS.
yeah,
I believe that there's currently quite a lot of issues still in relation to that deal, which we will find that out. But yeah, anyway, I think it's all macro positive for Bitcoin in terms of SAT value. And SAT meaning Satoshi, which is like cents, for the dollar.
yeah. Oh, 1 second. Yeah, that's what is it, like 1,000th of a Bitcoin or something? What is it said exactly?
I mean, I don't think it really matters, but
No, I mean
the
neither.
form that you actually have sats, right, to price something, think about it. If you have a world that is potentially, hyperinflationary and currencies are valued far less, right, that means things could be potentially valued in sats, just like US dollar. So, Bitcoin can actually act like a currency eventually. A lot needs to happen for that. I don't think it's going to happen for a long time. So I'm not like, a moon boy. I'm just saying it has the fundamental properties for this.
Yeah, yeah. I mean, like I just look at it as a store of value.
Yeah, more or
Um,
less the same.
yeah. So
And
it's
the
just like
high
gold or
beta
something.
return factor.
It's just like gold, but then better.
Yeah, true. It's like if you combine gold with the Nasdaq, it's basically that. It's gold, but really, really high beta factor to it, which means people make a lot more money on it, which is why a lot of people kind of jump into crypto
Yeah,
for the money.
yeah, yeah,
But like I have said before, you need to understand the markets. You need a trade plan. You need theses for owning assets rather than just bleeding capital to some shitcoin.
Yes. Yes. Totally agree.
Yeah.
And
Anyway, another big point to make is don't overtrade. And if you have a strong enough logical trade plan, this also goes into a daily schedule, right? Like what do you do every morning? What do you do every afternoon, night? And if you have a job, right, you won't have as much time, and that makes short time frame trading quite impractical, I think, for those people, and that means they should be more focused on like macro trading, which would be, is the bond market healthy in this environment? Are stocks overvalued or undervalued? Things like that. And you can apply the same practices to crypto, right?
mm-hmm.
Especially for narratives. Narratives are big on the high time frame and they make people a lot of money. So I think those are very important things to think about as well.
Mm-hmm.
Right. But if
Yeah.
you are a short time frame trader like me, the previous session to your time zone. So for me, I'm in Australia, right?
Mm-hmm.
That means my previous trading session is the US, right? So
Yeah.
when I wake up, I look at how the US traded, and then I have a general idea of how the markets look from that. So I would look at the NASDAQ, I would look at the ES, I would look at the DXY, I would look at the US 2-year yield. Then I would look at Bitcoin and Ethereum.
Mm-hmm.
And when I get a general consensus of is the market, risk on or risk off this week, then I can be more reserved about what I actually put into the market in terms of money.
Mm-hmm.
Because, a few times in the year, it's more rewarding to be fully risk on, right? And other times being sidelined is actually the play a
Yeah.
lot of the time. And there was a pretty active account on Twitter called MGNR. You probably have seen him, but he basically said there's positive EV, which basically means the risk return is better, right? To
Mm-hmm.
be sidelined majority of the time until you see the ripe opportunity to take.
Yeah.
And that should really resonate with a lot of people.
Mm-hmm. He deleted
And
all his tweets though.
especially how they enter the market. So things like limiting in costs less, right?
Mm-hmm.
You can also quote unquote hide your overall position. Like people can see it through OI if you are big enough size, especially in alts. But yeah, limit orders cost less than marketing in.
Yeah.
If you're a short-term time frame trader, most of them market in. And I can see that in a lot of my, algo tools. I can see that in open interest and funding.
Mm-hmm.
These data metrics I use quite often, like funding, OI, CVDs, delta, volume, and price action and structure. I use a combination of all of those to take my kind of well-known trap setups,
Mm-hmm.
which is basically where if you ever look at the order book on like Binance Spot, right, and you see there's far more bids or buys or buy orders on the order
Mm-hmm.
book, and you can see it on heat maps as well.
Mm-hmm.
And you see perps, going crazy on the shorts. Like you
Mm-hmm.
see open interest basically mooning into spot demand, right? That basically says you're quite likely going to get a trap set up around here. And then you would take along on your confirmation, which would be something like reclaiming and holding the 5 and 15-minute EMAs, right?
Mm-hmm.
And then after that, you would get, a nice 5% short squeeze. And
Yeah.
then you would close and then you would hedge because it was a short squeeze, which means it's not a sustainable move.
Yes. Yes. And
And typically that's how I trade. I trade off of extremities in the market
mm-hmm.
and I take advantage of it.
Yeah. And do you use any was I gonna say? Footprint charts as well.
I used to a lot. Most of the time now, I just use candlesticks.
Okay.
I like price action a lot, so I will look at a chart and basically see, is it making consistent high lows?
Mm-hmm.
Is it making consistent lower highs? Has it made a new lower low, which is like a break in the structure?
Mm-hmm.
And with this price action, I can also see how aggressive the market gets into these lows and highs, and I can also determine and quite accurately predict before the market will break structure. And how I do this is usually the 4 hour and 1 day EMAs, first of all,
Mm-hmm.
the RSI and the stochastic RSI. Mainly, oscillators are just used for signals of momentum in the market.
Mm-hmm.
And secondly, most commonly used for divergences, which would be, price makes a lower low, but RSI makes a higher low. That signals basically that there is exhaustion. So sellers are actually getting exhausted behind price action.
Mm-hmm.
And you can confirm this with lower delta into the low. And also CVDs getting very aggressive into the low, but actually not being able to sustain a breakdown.
Yeah. Okay.
So quite
Interesting.
quite clean, organized. That's what you want.
Mm-hmm. Yeah, a lot of people I know like the RSI stock, statistic. I've never really
It's
used
it's
it.
very good.
I've never really used it.
True. You use something that I also use, which is the premium between the perpetual market
Yeah,
and spot market.
yeah.
And if spot is leading, it is healthy. And that means, since we're both long bias traders,
Mm-hmm.
we can take pretty much a free risk long off of that,
Yeah.
which is quite nice. And, if it is a perp driven move, like I mentioned before, it's usually not sustainable.
Yeah.
And usually what you will see is algorithms sell that specifically spot because it is a free yield for them. It's a nice profit.
Mm-hmm. Yeah. By the way, guys, I'm only like or only. I used to be only trading like perps of like premiums and discounts, perps versus spot, or quarterly futures versus spot.
But dude, again, this is some alpha actually. If you go look at the OKX quarterly futures, since the November low, whenever it trades, obviously in backwardation, which basically means below index price,
Mm-hmm.
it has each and every time been a local low. And you've seen, 20% rallies since then.
Yeah, I was actually like very lucky to like catch 15K on quarterly futures.
You caught it
Yeah,
on the quarterly, dude. Nice.
yeah,
Bybit?
yes, yes.
Very nice.
It's it was basically parity with perps, and
Yeah, that's
yeah,
pretty rare
yeah,
because,
that's very
Bybit
that's
traders are known to be quite apey. Even the algos on there are kind of nuts.
yeah. The thing is like there's like liquidity is a bitch. It's really
Yes, a
hard
lot
to
of
get.
people don't trade future contracts, so
Yeah,
it's quite illiquid usually,
yeah.
and takes time to get into.
Exactly. You can profit a little bit. You can, of course, profit a little bit from it not being liquid by setting some orders, a little bit further out. Back in the day on BitMEX, they would like wick very extreme. You cannot use the
Oh
same
yeah,
leverage as you do on perps, because a stop
yeah, no, you
on
couldn't.
you cannot like have a stop hit basically on those because you will get slipped hard. So it's a different type of trading, but for
On
high
futures especially, yeah, I remember
yeah,
that.
but for high time frame stuff, it's the best. And
Yeah, no, I agree. I absolutely agree. There is a little bit of alpha in futures skew, which would be backwardation, which is basically futures trade below index price. That usually means there's very negative sentiment in the market,
mm-hmm.
And the way you can find out if they're wrong, right, is by looking at spot liquidity and spot order book depth, right?
Yeah.
And if the order book depth and liquidity is opposing the futures, the people short in futures, basically, it means they're about to get trapped in, the next week. And that
Hmm.
is kind of like a free long, honestly.
Yeah.
And the second side of that is contango, which is where quarterly futures trade far higher than index price.
Hmm.
And the index market, which is spot exchanges, are actually selling it, like selling into this rally. The moment it starts to lose momentum is basically when you open a hedge,
Yeah.
because then you basically have a free yield on those future contracts.
Yeah. And I remember like 2019. 2019 had a little bull market, like a very weird bull market. I think it was only perp driven, but opinions change, or like differ a bit on that. But I believe on the top, like it was 13K or something.
Yeah,
Uh,
13, 14K.
yeah, the quarterly futures had like 15% premiums on the perps.
Yeah,
Sorry,
that's
not
very
on the
high.
perps, on the quarterlies. 15%
Yeah,
premium.
yeah.
It was so
That that
insane.
that that makes sense. That's a very good hedge there. I
Yeah.
remember that rally, Spot was selling it. Specifically, Coinbase was like dumping on it, and then there was that Plus token scam,
Oh yeah.
which was
Oh,
basically what, like 80% of the Bitcoin supply for 2019.
I don't remember it exactly anymore, but that was huge. That was
Yeah,
huge.
I remember that. It
Um,
was billions, I believe.
and like it still is, it still is. But back then as well, it's and always has been a thing in crypto is basically the disconnect between the east and the west. Like I'm in the west, of course. Um, we have no idea what is happening in the east. We don't know what is happening in like Chinese news, right? We don't know what is happening in Korea. Um, I remember back in the day, OKX, would like publish a statement, for example, and in Chinese, and just an hour later they would like publish it in English, and then you're like, fuck, because you're
That
one
that hour
minute,
difference is
yeah,
big, you know.
yeah, it's big. So yeah, um,
I mean, considering this market is just ran by low time frame and high frequency algorithms, that's how it's priced.
yeah,
That 1 hour is big.
yeah,
You like for example, the Binance FUD, I guess you can say, the USDC FUD, basically any FUD.
mm-hmm.
There there was some time difference between the market reacting, and usually it always originated from Asia.
Mm-hmm.
And the Asia traders would basically get position short big time. And then the market would rug, and then the West would, get wrecked, and they'd be like, what the hell?
Yeah,
But the cool thing that has closed the disconnect is actually Twitter and CT,
yeah,
as well as the conjunction between Telegram communities and Twitter communities. So it's quite consistent now, I'd say, compared to 2019, 2018.
yeah. It's getting
And
better every year, like for real. It's
yes, I
it's
think Web3 will probably improve it a lot as well.
yeah. Yeah, I totally agree, and it's also like how you manage it yourself. And by the way, I'm coming up with an interesting question. How do you manage news events yourself? Do you have any news service, or do you have like, yeah,
It depends on the type of news
mm-hmm,
because if it's economic, involves like CPI
mm-hmm,
and any inflation report data, it's usually within a trend, right? So you
mm-hmm,
can predict it with like a 75% probability, right?
mm-hmm,
I'd say most people tend to long before it, which is kind of dumb
mm-hmm,
because what the market makers do is they will pull the liquidity from the book, and then these other algorithms get basically rugged. They become the liquidity, so they start selling or buying. So you get this really quick move in the book, like 2% move, right? and then the market will revert, 5 minutes later and grab the other side of the move. So basically, the way I play it, at least, is I would put orders, 3% below price on Bitcoin,
Mm-hmm.
and then I would also put like sell orders like 5% higher.
Oh yeah.
And basically, I would play the liquidity dynamic. And then after that, I would not trade the rest of the day simply because it's algorithmic. It's not really worth trading that
Mm-hmm.
because there would be a ton of inefficiencies in the market. So the pricing is not organic, which means it's not worth actually risking capital to trade that.
Yeah, and like my own experience is basically last year. The market would like react very very strong, and basically trend. For 2 days after FOMC.
Sure.
Um,
Yeah.
and so like I'm not sure how long it's ago, maybe like 1.5 years or two, like 1 year. So it made me like get DB premium, DB news premium. But the last 6 months, what is it? Yeah, the last 6 months or so. Um, it's just a big wick, a dark mall. It does.
Basically,
It doesn't really
if
start a
you're
trend
around
anymore, right?
in no, yeah, no, no, no. And there's a lot of reasons for that. So a lot of firms started blowing up in the meltdown, I guess.
Yeah,
I mean, we laugh about it because we survived it. We don't
yeah,
obviously have
yeah,
same capital they do, right?
yeah.
But people like 3AC, FTX, Alameda, and a bunch of others recently that left. Like Jane Street, Jump.
Celsius, whatever, like
Um,
everything.
There is honestly so many, probably a dozen, if not more,
I even know a
firms and
couple
trading
Dutch
firms that
ones,
have left.
Yeah,
Yeah, yeah, exactly. And because of this, that means a lot of coefficiencies and correlations that used to happen, from 2019 to 2022, have basically disappeared. So now Bitcoin price is the same as gold. So it typically trades with gold and with bonds. And that tells you that the people that are still in the market are actually like big, big, big boys, which could be, Goldman's, could be JP Morgan.
mm-hmm.
We don't actually know. But yeah, yeah, a lot of these news events have started trading more and more differently than they used to.
Yeah,
The volatility is more muted, especially recently. And that's because there's less liquidity being quoted in the book. There's less market making, and there's also less limit chasing. Right, so there's like a lot less momentum.
yeah,
But we're also in kind of like a blackout period based on seasonality. The
yeah,
May to like August period is pretty dead usually.
yeah. Sell in May and walk away, and I'm pretty sure a lot of people are like slapping themselves again. Like, oh, should have sold in May and walked away, because up until now, this month has been boring, like very boring, right?
Hmm.
At least I think
Yeah,
so.
very.
Um, and that's
There have
why we
been a
do.
few kind of volatile days that have been nice to trade, but it's
Yeah,
far less likely. I mean, they used to be what, like 3 a week,
yeah,
and now it's one every 2 weeks.
yeah.
That's bad. Like,
Yeah, it's boring, and that's why we do fun stuff like this, fun interviews.
yeah, or
um,
we go and trade things like Pepe.
oh yeah, oh man.
Yeah,
Did you?
that was funny.
Oh man, like it's. I had a good run on Pepe, and then I just closed it on the Saturday. I was like, well, I made enough. Stepping out. Like Bybit went
Yeah,
KYC.
exactly.
Bybit went KYC, and I basically took 2 weeks off, and I was like, let's chill. did
That
you?
that is a very good thing to make. Good point to make is when you reward yourself, all right?
Mm-hmm.
Time is the most rewarding factor, um, because health obviously comes before money,
Yeah.
and the second most rewarding thing is obviously seeing your money actually grow.
Yes. Yes, and you know, like in my personal experience, you know, like I really worked on my health. I would say the last year, and I would, you know, like throw my health out of the window, you know, and I'm pretty sure you've, you know, at least been guilty of it as well, like
Yeah,
skipping sleep,
every trader makes that mistake.
and you know, like bad food or not getting enough sunshine, you know, things like that. How do
I
you
think
handle that? And how?
sleep and de-stressing are very important.
Yeah, like how do you handle that? Like how did you progress in that? Like did you progress in that, or did you have to make progress in that, or are you still messing that up?
Yes, changes I made basically was eating better.
Mm-hmm.
The other big change to make is a more organized diet, more organized schedule, so you don't procrastinate.
Mm-hmm.
First of all, which means you don't have like a knockback effect on everything you have to do that day,
Mm-hmm.
which makes you more stressed, which also makes you make stupid decisions when you're trading,
Mm-hmm.
right?
Yeah.
And then each evening, take time off, de-stress in the ways you enjoy, which could be reading. Some people like reading, some people like gym in the evening, right?
Mm-hmm.
Or even family time, or even, going out. These are all beneficial factors, but getting out a little bit each day is quite important for the mental mind.
Yeah. Totally agree. Totally agree. And yeah, that is something not to forget, because otherwise, you know, you turn crazy, or you know, and it's also a thing as
You
this.
overtrade. A
And
lot of people overtrade when they don't sleep enough,
mm-hmm.
or they don't have an organized schedule, or they don't have, say if you lose two trades for the day, you take a break, you go do something else.
Yeah, exactly. And it's also about discipline, you know, like get a rhythm and eat well and maybe do some gym, you know. It's
Yeah,
basically
absolutely.
discipline outside of trading, you know, will help you inside of trading as well. I'm pretty sure. So, yeah.
No, yeah, it will. If you have discipline with your general lifestyle, you will have the same approach with trading, which is beneficial.
Yeah.
Now, a lot of big people like Trader Dante have spoken about this,
Mm-hmm.
and it is quite important.
Yeah, and you know, like we've seen, you know, for example, like we've seen the real life examples of Sam Alameda, you know, um, and Sam Trabucco, like Bankman Fried, I meant, and Trabucco. You know, like everybody knows they, you know, they looked like shit. Um,
Yeah, they don't take care of the body. Their lifestyle was evidently not great, and it could have been part of the reason why their fund ended up blowing up. And then because they weren't going to take the responsibility for it, they started embezzling funds. That's where the fraud happened.
hmm Yeah, yeah, and just the, you know, how do you call it in Dutch? We call it omkoping, funding
I just
everything,
call it don't be stupid.
bribing basically.
True. But yeah, more or less, discipline. Very, very important.
Yeah, and how do you like going on to the next subject? Bitcoin versus alts and other markets.
Mm.
What do you do
This
with
this is the
alts?
most fun. There are many ways to approach altcoins, right?
Mm-hmm.
If we take the old school way, which we both follow sometimes, that's looking at altcoins versus BTC on the BTC pair,
Mm-hmm.
because you can see relative outperformance,
Mm-hmm.
especially on dips. If let's say uh, Matic, for one, that kind of a shitcoin, but whatever.
Mm-hmm.
Matic against the Bitcoin pair has relative strength on dips, right? And if you see Matic also have a good engulfing pattern on the low as well on the USD pair,
Mm-hmm.
that would tell you that this altcoin is going to outperform Bitcoin in the near term, right? So this can provide you a really nice extra, 10, 20% on just spot holdings. If you have margin as well, that's like a 2x trade,
Mm-hmm.
which is clean. Otherwise, I would say narratives are very important. So, if a token has a nice roadmap, they're building the community up, they're releasing a product soon, And quite a few of these narratives that went around were like Arbitrum,
Mm-hmm.
which did like insanely well, and then obviously, like all other altcoins, they reprice lower because the supply is realized.
Yeah.
But Pepe, I think, is a good narrative to talk about because it's such a meme that people buy into it because of one thing, and that's because Doge was a meme, right?
Mm-hmm.
And Doge mooned, like it pulled a 1000x or something ridiculous,
Mm-hmm.
right? And then Shiba Inu was created and it did the exact same thing,
Yeah.
right? So you see these not carry trades, but like these same meme coins do the exact same thing, right?
Yeah.
And because of this, it creates a meme narrative and a mindset in the market. So people pile into these tokens, which creates a perfect bubble and also the perfect exit liquidity. You also have to understand with a lot of altcoins, you have to understand the supply side. And a lot of the supply side is the unlock schedule.
Yeah.
And, there is a site for this. If you just Google crypto unlock schedule, there'll be a site which tells you a bunch of token unlocks. And you can basically see when supply is basically dumped on the market, right, by insiders, community, developers.
Mm-hmm.
And ironically, just even knowing that unlock schedule is a free short,
Yeah. Yeah.
free money.
Yeah.
But generally, I am just a Bitcoin and Ethereum trader because the liquidity is greater on these two, and that's what I like. And the order flow is cleaner.
Yeah.
Typically, altcoins are way better to trade in early to mid bull market because the returns are 10 times Bitcoin.
Yes, exactly. And the thing is, like, I mean, I'm better on the short term for Bitcoin, Um, but I agree. Like the only things, I'm talking about me personally, I only catched Bitcoin and Ethereum early. I'm just a little bit bad with the meme coins and the shit coins and stuff. I had a couple good runs on them, but yeah, I mean Pepe was unreal, but yeah, I'm not the best with altcoins yet. It's always a gamble. Sometimes they think you think they will outperform
Yeah,
Bitcoin, and
it
then yeah.
is.
But however, I do think, and I'm not sure about you, um, you know, we're basically, I mean, I'm basically a trained monkey, right? I look for certain things in the market I love to see, which make me either long or short, right? Like there's a certain setup. It can be
Trade is
everything.
friend. I mean, trend is friend.
Yeah, yeah, it can be everything. Perfect, like wedge, and you see funding lining up, and you think like, well, or like this is like one leg, and like the second leg is coming, whatever. Things like that. And I know, like I like those things on Bitcoin, right? But the thing is, like, there's always one shitcoin that is that has my perfect setup, right? So I probably should scan them more. Like, do you
Yeah,
do
I mean,
stuff
I,
like
I
that,
am
or?
working. Yeah, I'm working on a little dashboard that will identify like unusual volume in altcoins
Mm-hmm.
and relative multi-day strength against Ethereum.
Mm-hmm.
And basically, these two factors have been the easy way to find outliers in the altcoin market, which then usually tend to have like some massive rally.
Yeah.
If you want to make it left curve and easy, trend is friend, right?
Mm-hmm.
Simply apply the RSI oscillator and a EMA trend indicator
Mm-hmm.
and price action structure. So price structure is very important because when you see price structure shift, there's a new trend, and what confirms a new trend is the EMA or MA trend, right?
Mm-hmm.
That price is respecting it as well as confirmation, above or below the midline of the RSI. These are all really systematic factors.
Mm-hmm.
And it happens all the time at the early stage of any trend in alts. Every single time. You can find it on like every single time frame as well. So it's infinitely tradable. The three things I would watch out for though, right, is the liquidity,
Mm-hmm.
how much volume is traded. And these two will allow you to identify how much you should risk in terms of your margin.
Mm-hmm.
And the funding, because funding on alts can be savage. It can bleed you.
Yeah, yeah, yeah. I only do. I only well, most of the time I only do it if funding is on my side, right? If funding is paying me. Um, in an extreme bull market, I might go against it. There were some other occasions I go against it, but usually funding,
Usually you need a narrative to go against it. Like some bad FUD comes out and a lot of people will short like BNB. Before it used to drop like 10%.
Mm-hmm.
So it initially works when you have a lot of people pile onto the
Mm-hmm.
same position with, obviously spot selling.
Mm-hmm. Yeah, and the thing is like like if funding is high, for example, it's people long aggressively, for example. Um, like the trend is your friend, right? But as soon as like the price starts stalling and funding is high, then like you really got to watch out because people will get eventually liquidated or margin called because they're paying
Yeah,
funding.
yeah, absolutely.
And you're making you basically think I'm joking, or like some people listeners might think I'm joking, but like I know traders who are like legit doing this stuff like with more than 20x, um, and they will after a
I do
few
that.
days, yeah, right,
Like a lot of my short time frame trades are like 50x leverage.
yeah, and
So
that's
it's very high risk, but like this is the point when you understand the market mechanism,
mm-hmm,
which is not even joking, it's the same concept as an engine, like an actual car engine, right?
mm-hmm,
And when you have the same factors running smoothly, you can use high leverage, right?
yeah,
But when one thing breaks, this could be the same as like uh, the drive shaft or a gear in the
mm-hmm,
transmission, right?
mm-hmm,
The whole car will come to a halt and shit hits the fan very quick.
mm-hmm,
And that is usually where you get margin events.
mm-hmm.
And people get margin called, so shorts get liquidated and longs get liquidated.
Yeah, I mean, like one little tip I give to listeners, I give it all the time, but I'm with you on it. I expect to have like some more audience. But if you have a stop and a profit, always put your trade on closed margin and on 100x, right? Just to prevent like getting slippage on your stop in profit. It's probably more expensive than taking the lick. Just to be sure, because back in the day,
I mean, what I do, it doesn't really matter what the leverage is, right? You want to make sure your stop is at like the right index market, because a lot of the
yeah,
perp exchanges like mess that up, which
yeah,
means you get stopped out when the perp is way lower than your entry, and that like liquidates a lot of people.
exactly, completely true. I do always use stops on index, and like it's like sometimes it f's you, and sometimes it saves you. Many
Yeah,
times, like I just put them at like the certain areas, right, where perps want to nuke through it, and spot tries to hold it, right, like round numbers and stuff. Like usually spot holds them, perps nukes to them real quick, like just running the stops, just run the stops and back down.
yeah, it's
Um,
been happening on Binance perps lately.
yeah, and BitMEX used to be like the very worst on it. Like Bitcoin was trading sub 10k, and you would get easily $300-400 slippage, on a perps trade. And yeah, I mean those things don't happen anymore, or at least it's been a long time since I've seen those. Um, but back then, if you had a stop in profit, for example, um, you would get slipped, right through your entry, turning like, what you think is like a profitable trade with your stop in profit even turns into a loser. And if you like put it on closed margin and make it 100x, for example, your collateral becomes really close, and you just take a small lick, but your collateral is really small, so it's better to take the lick than to get the slippage on your position. Right?
Interesting.
You of course.
I don't agree. I always manage my positions, right? So I don't usually sleep with a position open unless I know it's more of a macro-driven trend. When it's not, when Bitcoin is just trading kind of weird, doing its own thing. That's when I'd say it's more of a predatory market, and it's more or less just liquidity hunt after liquidity hunt. That's when I would manage my position, right? But if it's macros driven, I would leave my stops in profit and actually be able to sleep at night.
Yeah, but I'm just saying, like, if there's like in you can have a stop, but like you need to have buyers, right, for your stop. And if there's like an illiquid altcoin, for example, you will get 6 slippage, right, on your stop, and it will go.
Or you could just close it.
Yeah, but like if you're smoking a cigarette or doing something else, like happens with me sometimes.
Yeah, sure. I mean, that's where it benefits to have your stop priced on the perp exchange instead of the index.
Yeah, but then still,
and
then
you can quickly look at where the index price is currently opposed to the perp price. Most exchanges most exchanges like Bybit, I'll use this as an example here, right?
Yeah.
You'll see the yellow number, which is the price. Then you'll see like a white one, which is the index. And a lot of alts, if you see the perp well above the index price, to be honest, I would not trade that alt for like a few hours or a day, because everyone just gets farmed on it. It's not worth it.
Yeah, unless you want to short it, if you think it's stoppish, or something. Because
like a lot of people do that, then they get liquidated.
Yeah, exactly.
It's a scam.
Exactly. Then they push one more.
They always do it.
Yeah. Did we
Don't
forget?
be exit liquidity.
Yeah, don't be exit liquidity. Don't be a top buyer.
You're a bottom seller.
Don't let me catch you on the footprint.
True, you can actually on footprints, right?
What?
It's basically for people that don't know what a footprint, right, is a footprint chart. So everyone knows what a candlestick is.
Yeah,
but imagine a candlestick, but with the numbers. So the people usually on the left, they would be the buyers, right? And you'd be able to see the market orders of longs opening, shorts getting stopped out, and then on the right of it, you'd be able to see the sell orders as well. So like which side is filled and what the balance or imbalance is. Right? And in this, you can literally see when people are getting stopped out at bottoms and tops. And usually that is the entry point for a lot of the footprint traders.
Yeah, so
and if you want to see examples of this, read the blog from Abe Trade, so Trading Right, and then obviously the Quattro Finance blog. Small account, but you can look it up on Twitter.
Yeah, definitely. Totally agree. And yeah, like I would say, yeah, footprints are kind of new still, right?
I mean, overall they're not, because take Cantor and Clark, right? He's used order flow tools and templates for years. He used it on ES and Nasdaq, I believe.
Yeah, you have Sierra charts and what else?
Exactly.
Exocharts.
Sierra, you have the competitors, they're all like traditional market, right, orientated. Then the crypto orientated ones would be Exocharts.
Yeah, I'm having Exocharts here up on
You
the
can
screen.
show it on your screen.
Yeah, I have Exocharts here open.
Nice.
People can view it. Listeners can see the chart. I have a few templates, and yeah, over here, this is the most simple one. You basically see net longs and net shorts, and both are market orders. So people marketed in long
Yes.
and people
What you
marketed
should
in
know though
short.
with those, that they're not like 100% accurate, net long or short. It's more or less a assumed ratio,
Mm-hmm.
like a in-house calculated ratio of the delta difference
Mm-hmm.
between open interest, which is basically like new positions when price is down,
Yeah.
would be assumed as shorts, right? And then it's basically calculated in the difference in delta, and the confirmation would be the volume.
Yeah. Yeah. I agree. I agree. And like the thing is like that's a good thing, for I think the good thing of um,
It's a good initial gauge of each move.
yeah, but I mean like
And
premiums and discounts, like they see the passive bidders and stuff, That is where, like partly like the differences come from, right? The premiums and discounts.
um, yeah, on the spot side
Yeah.
specifically, yes. When spot is leading price for a sustained amount of time, there are passive buyers, basically limit buyers.
Mm-hmm.
And you would see persistent market shorts growing on the perpetual side, which leads to perps discounting the index price, right?
Mm-hmm.
And you can confirm it with any order flow tool, basically.
Yeah.
In the form of CVD, delta, net long, net short, OI, and things like TPO.
Yeah. Yeah. TPO is interesting.
Yeah, it's nice.
Yeah. Yeah.
Like trading extremities in the market is like one of the cleanest ways to trade, which
Yeah.
is why I like it a lot.
Yeah. Yes.
Um, yeah, I think we've talked a while. Should I do the
Yeah. Yeah. Sure.
recommendations?
Do the recommendations. We're at 1 hour
Since we're
now, so
more,
yeah.
yeah. All right, so I got a few recommendations for the people listening. Right, so I'll start off with the books.
Mm-hmm.
Mind Over Markets by Dalton, really really good.
Mm-hmm.
Technical Analysis of the Financial Markets by Murphy. Alpha Trader by Donnelly, and Mastering the Cycles by Howard Marks. All the Market Wizard books
Oh yeah.
by
Those.
Schwager.
Yeah. Sorry. All Market
Um,
Wizard books by Schwager. Yeah. Sorry.
yes, they're good books, like really really good books.
Mm-hmm.
I highly recommend them for accounts and trading resources. I would say Trader Dante, Abe Trade, so Trading Riot. Cryptocred for YouTube and his
Mm-hmm.
write-ups. He talks about like oscillators, indicators, and general like support, resistance, and
Mm-hmm.
price action trading. Quattro Finance blog, which is new, quite good.
Mm-hmm.
Cantor and Clark, his Twitter feed is quite good. He also has a free order flow and trading course, I believe, online.
Oh, nice.
C2M, he has a paid course, which is good, I've heard. And he does videos now on trading. He also tweets a bit on order flow setups, which is pretty cool. You can see basically when he spots like bottom shorts and top longs. And then I know these two get like a lot of crap, but they are some of the best like long time frame traders. And even like sentiment and flow based. Trader XO, Trader SE. There is a new account, which if you want to know more about macro and macro flow, his Twitter is Global Flow. A lot of people will know these other accounts too. Is Ted Talks Macro. He talks about macro and Bitcoin a lot. Great account, good videos. Pierre, so he's the Bitget guy, really cool guy.
Mm-hmm.
Him and I talk about like trading trend a lot, what EMA trend indicators we use, and price structure as well. He's pretty good for narratives as well. And then another macro guy called InRT Color Dose, which I'll give to you to put in the description. But he talks about macro, and he's been right about like actually everything so far, which is kind of nuts. So he was right about the banks, collapsing. He was right about the emergency setup for the Fed to inject into the market and banks. He's been right about inflation, like every single point, GDP, NASDAQ bouncing, like everything. Pretty crazy.
Nice. Sounds
Yeah,
good.
I think that's it.
Yeah, I can include the list in the video description if you want.
Oh yeah,
Um,
absolutely.
so yeah, shall we leave it like this or some other
Yeah,
like
I think
yeah
it's pretty good. It's an hour. We talked about a lot of in-depth topics, which are going to be very useful for a lot of people, even experienced traders. It's quite nice to hear that resonance from other experienced traders like us, right?
yeah yeah. And if you guys have any questions, make sure to like ask them. It is like YouTube is social media, so make sure to ask them. I will do my best to get Skew to answer a couple of those.
Oh yeah, we
Um,
could do a follow-up video. So anyone that has a question, right,
yeah, yeah.
put them in
Would
the
love that.
comment section.
Yeah.
We will read through it and we will compile a video, like a response video, basically.
Perfect. Sounds great. Well, guys, yeah, happy trading. See you guys later.